Welcome with me Dr. Timo Bernau from GSK Stockmann, who's ready now.
Hi. So the topic is legal classification of DeFi in terms of trading, lending, and investing. I don't want to spoil, but that's not possible. I should have told Philip beforehand. Why is it not possible? It's not really possible because the regulator is light years away from the market, and the market is developing so quickly, and there's so many different DeFi systems, I cannot even catch up. So you should understand this presentation as a try to narrow it a little bit down, and we'll see what the future brings. So that's just a glance about how the market would see DeFi. You see wallets, you see predictions, lending, so different areas and scope where the market would actually say that's DeFi. I've just brought up like 3 definitions of decentralized finance by Deutsche Bundesbank, OECD, and the Center of Financial Studies here from Frankfurt. If you see the underlined words, they have all something in common, and that is actually financial services replacing intermediaries or replacing banks, so without banks. Just the last one is just saying largely without intermediation. Yeah? And that really goes into direction what Magnus said earlier, and that will be a question of my presentation today. How decentralized must DeFi be to be decentralized in the legal or regulatory sense of the wording? So if we talk about financial services, we need to know what the landscape is. Yeah? Here from Germany, we have banking and financial services being set up in the KWG or Gewerbeordnung. We have payment and e-money business in the German Payment Act. We have an investment regulation, so that's the German Capital Investment Act. And we have got securities regulation, just came up as a new law, and coming up, because this will be directly applicable, the cryptid asset regulation in terms of the MiCA. So that's already a complication in the classification as such. Where do we start? Yeah? Where would we end? We'll see. I tried so to analyze the DeFi in terms of really financial services and so-called building blocks. So I would, like from my point of view, only qualify as a DeFi any service which is usually run by a bank or any other regulated player. So that could be insurance, investing, whatever. There's an equivalent in a regulatory framework. On the right side, you have more the different tools you would need to actually provide DeFi. Of course, there are some which are maybe in between. So, for example, if you have a wallet or a stable coin could easily be e-money, and if you provide e-money business, you need a license. Or if the wallet as such would have a custodial function, that could also be a financial service. Yeah? But if you recall the slide I had put on at the beginning, there was also like wallets or stable coins. I would usually do not count them as a DeFi service as such, but just like a tool to provide such services. So let's try to narrow it a little bit down on regulation. First of all, if we talk about regulation, we need to think about, as I just said, what legal framework are we talking about? Yeah, so how do we get actually in the legal framework? And the second question would be, okay, if we have the applicability of, for example, German regulation, is the financial services being offered by a DeFi solution actually a financial service or a banking service which used to be regulated and which is supposed to be regulated? The third and probably most difficult question is, who are we going to regulate? Because in traditional financial industry, we have an entity which is used to provide the regulated services. And that's actually a precondition for traditional banks. So about the applicability. Usually in Germany, we have two things to keep in mind. One is you just happen to be in Germany. So irrespective if you target the German market or you have German products, if you're just by chance, because Frankfurt is so nice, and you have got your university, you start your business here, but you do not intend to address the German market, you would per se be in the German regulation. If you're not resident in the German landscape, then the question would be, are you actually targeting residents in the German market? And this is the BaFin practice here, and you must recall this is from 2005. And it has not been updated so far and is still used. So some things here may be a little bit odd, but that's actual practice. So the question whether you market to Germany could be you have a German website, or you have a mailing program, a mailing list to German clients, or you just have a German phone number or a German email address. Yeah? So anything which could be any hint to Germany might already trigger the applicability of German regulatory law. Here BaFin actually says, if you provide services to German clients, that's already an indication you're doing so, meaning marketing to German residents. I mean, from 2005, that seems a little bit okay. Today, especially when we talk about DeFi and all these new developments, it's questionable if really everybody which is serving German clients has really done something to do so, because there's just a new ecosystem how people are actually informing themselves. Yeah? So that's quite questionable, but still market practice. However, and please keep this in mind because that's really important, there's still the freedom to provide services. That means if you do not fulfill all the things I said earlier, meaning you're doing no marketing and you don't have any German contacts or whatever, you can do what you want. Yeah? So if you are in Cayman Islands or in the US and you do nothing to actually attract German residents, you're not in scope of the German regulation. Yeah? So easy. Huh? For example, I think it was CAC22A, which had a press coverage that they're on the radar of BaFin. They just put all the German things offline. Yeah? Let's see what happens. So I don't want to go into all the details. That's just an example. On the left side, you see the traditional decentralized, the traditional borrowing and lending business. And on the right side, you see the decentralized way. Why is it important? Because on the left side, you see a clear line. You've got the bank and you've got the regulator. On the right side, you see in the ideal world of DeFi, you do not have any entity which is running the system. It's, let's say, all run by the users, more or less. We'll see how this is true. So if we want to try to find out about regulation, the first business model I was supposed to analyze is the lending business. And surprisingly, we see not a lot of the existing regulation is applicable. For example, credit business, that's just about loans, and loans is understood as being fiat money, so money or which is being accepted for payment. Yeah, that's not true with most crypto assets up to date. Or the deposit taking, yeah, even if the law just recalls it funds you should take in, funds also is defined as any money, book money or coins or whatever, but not crypto assets. It could be deposit taking if your DeFi system would accept fiat to change it into crypto. Yeah, then you got a problem, but if you don't, which most of the DeFi lending systems don't, you should be out. Same with investment brokerage. Usually, there's no selling or buying of financial instruments involved. Of course, the crypto assets as such, they are financial instruments, but in the lending or deposit taking, you usually get it back. So there's actually no transaction which should lead to change in the ownership, at least not ultimately. Operation of a multilateral trading facility, same with the brokerage service. There's usually no contract for the purchase of financial instruments. Of course, as I said, there's so many different systems. It could be the case, but traditionally, that should not be the case. Portfolio management, also negative. Same with asset management, because there's no discretion. And you need the discretion of the system that you're in these financial services. Payment service or e-money, also negative, because you need money or a money account, which is not true for crypto. The only exception would be if you would have a stable coin involved being e-money, yeah? Then you would be in the Payment Act, but usually you don't. Here we have the same slide for investing models. On the left hand, you see you not only have the investment firm being regulated, but also the exchange. So you have two players being regulated, or the fund vehicle itself is usually regulated, as my four colleagues pointed out. On the right side, ideally, you do not have anybody who's being regulated. Here, you could have regulated services being fulfilled. For example, if you've got a discretion in the management of the funds. It doesn't matter if you have the discretion by a smart contract or any algorithm. That's clear view of the regulator. You don't need a person, a natural person, to do the decision making. Yeah? So if it is all in the code, it's still portfolio management. Same with the asset management or the investment brokerage. Yeah? Here, if you run a system, EDV system, automatically, which brings the parties together, you are at least in the investment brokerage service. And also investment management. So having a pooled asset for many people could be investment management to the KAGB. Yeah? So you're an investment fund, but you don't have the permissible form of an investment fund. A way out could be if you give the day-to-day control about the investment fund to the users, which is, at least to some extent, the general idea of DeFi in investing. Same with brokerage and decentralized trading. Here you even have a couple of regulated market players in the traditional world. On the right hand, you see no one should be regulated by the system as such. I wouldn't run through all these different regulations. However, to sum it up at this point, most of the trading facilities I've seen would, at the end of the day, at least fulfill one of the services. So whenever you have the position to acquire or sell a financial instrument, which is, at least from the German perspective, true for most crypto assets, you would be providing some kind of regulated service. That brings us to the question, also Magnus raised in the beginning, who are we going to regulate? Yeah? The developers, the distributors, maybe the governance token holders, or any centralized entity, or the users. You must take into consideration that even users could potentially, if they do it at a certain scale and to a certain extent, in a certain time, provide financial services. Yeah? And that's from Kissner, a quite interesting slide about decentralization. And there's different levels about decentralization, starting on the left-hand side, where it's just like, for example, the underwriting is non-custodial, but like margin calls, price finding, other things are decentralized, are centralized. And so from the left to the right, you see actually on the right side, every component, including development, is decentralized. And the finding was there's actually no such thing in DeFi. Maybe you could call Bitcoin totally decentralized, but that's, as I said in the beginning, not a financial service as such. So for the current situation, what's the resume? If you're not in Germany or not in the EU, it's all good, maybe. Qualification of the regulatory service is difficult, but in most cases possible. But the addressee, that's quite unclear. However, as Magnus pointed out, as long as there's someone who's earning money with it, or has someone interested in, or can actually build the ecosystem around it, the regulator will find someone to be regulated. So just to look in the future, what's the situation under MiCA? Under MiCA, we have a broad set of new regulated services, all directed to crypto assets. I've highlighted the red ones which have just been introduced in the latest draft of the MiCA being published in March. So if you run through the list and you can recall the services I just presented, it is quite likely that most, if not all, of the DeFi solutions we see today will actually qualify as one or the other of these services. And that's real burner here. I'm not sure if everybody has seen it. No freedom to provide services. That was not true for the latest draft. It just came up in the March draft. So here it is clearly stated, no legal or natural person should therefore be allowed to provide crypto asset services to union citizens on a non-occasional basis without having a legal representative in the union and without being authorized under this regulation, even if such service providers solely at the own initiative of the union clients. So that means if you are at Cayman or the US and you do nothing to address the European market, you should be obliged to have a registered office here and a regulation. My question when I read it was, okay, what is the European Union going to do about it if you still do it? Yeah, so that's a good question, I think. However, as we talk about DeFi, that's also just presented in the latest draft of the MiCA. There's an exclusion of decentralized finance in the MiCA, actually saying sometimes the issuance and exchange of crypto assets may be decentralized, and that should be reflected and considered by the relevant regulation, saying that you should not be obliged to have one single person or entity running the system, and that you should not be subject to regulation. The same is true for DAOs, so also DAOs could exist, provided that these crypto assets are compatible with the requirements of this regulation and do not pose a risk to investor protection. So probably not totally out of control of the regulation. So again, reading this, the question is, what does it mean? Not controlled by any central authority, entirely rooted in its algorithm. So I think that will be very difficult in the future to analyze if we do not get further guidance by the ESMA or any other regulator feeling responsible for it. If you recall the chart I've shown earlier by Kissner, nobody is actually, like no system is actually today fully decentralized. So what does it mean? How decentralized do you have to be out of scope? And as providing these services without a license will be a legal offense. That's very important to understand. So for MiCA, no residents in the EU, all bad, question mark. So that's a real shift here. Qualification as regulatory service, in most cases, very likely. Exemption only for decentralized services, organizations which are not under control. And even if you manage to get out, which there I share Magnus' view, would be doubtful in most cases, you still would need for some services, for example, the issuance of tokens, compliant white paper, and that's, let's say, the backdoor for the regulator, no significant risk for investors. So probably not totally out of the radar of ESMA. Civil law aspects, just very closely, because that's a new development. Bilateral contract, yeah, that's easy. You can have someone with the power of attorney today. You can have a contract even in DeFi. Contracting with someone you don't know, also possible. No problem under the German law. For civil loan, as I said, it's not a regulatory loan, but we already see some people saying, even lending crypto is a loan, which leads us to the next question: will the consumer protection provisions for retail loans be applicable? And there's also the first people say yes. Even if there's, let's say, no business, it's just peer-to-peer. If there's no business, still there needs to be the civil law protection. Same with the content control provisions. So AGB-Kontrolle, also people say even if there's, let's say, no one business offering these contracts, they are centralized in a way that they are made beforehand and offered to a lot of people. So there should be a reason for content control of the contracts. That was my first try of getting DeFi in a legal classification. Thanks a lot for your patience, even if it was very lawful, but hopefully a little bit helpful. Thanks a lot.